the most important and the most impactful way they could try to take down his presidency is by spiking the interest rates. Liz Truss in Britain, she came in, she had a plan, and the Bank of England, I think, made a lot of mistakes, maybe intentional. Interest rates shot through the roof, and it took down her government in a matter of days. Of course, we don't have the same style of government, but it would be devastating to the president if you had this bond market death spiral. And that's one of the things we're going to have to fight against when we win. And again, I think we're going to win.
I know a lot of people have been surprised by interest rates rising after the cut. Of course, we weren't, because I thought the Fed was making a mistake. And I was worried about the same animal spirits we've been talking about. And of course, our horrendous fiscal situation. Having said that, we've come quite a ways. I think we're probably in the 7th inning, but sometimes you can make a lot of money from the 7th inning to the 9th inning. And who knows if the Fed stimulus into a melt up in asset prices with the kind of animal spirits I talked about give you upward inflation, which is not our forecast, but we're definitely open-minded to it, and we're not expecting lower inflation. That could tip the bond market and create a problem. So we're still short treasuries.
This couldn't come at a worse time, but Janet Yellen said that extraordinary measures are going to be taking place. This is the special accounting maneuvers to avoid default.
There's U.S. Treasury Secretary Janet Yellen warned Friday that the government will reach its debt limit on Tuesday and will need to take extraordinary measures to avoid risking a potentially catastrophic default. The issue will, of course, now fall to Yellen's expected successor, Trump Treasury pick Scott Bessent, who is still going through the Senate confirmation process.
January 20th. Donald Trump takes presidency. January 21st, here we are. Now, he's going to need Congress to lift this debt ceiling. But if you think Congress is just going to do whatever Trump wants, you're wrong. He wanted the debt ceiling raised, included in that temporary funding package that they voted on just 4 weeks ago, and they wouldn't do it. And this is going to create that uncertainty about how the debts will be paid. It's going to create a lot of mortgage rate volatility and a lot of risk to the upside. It is shocking how much this impacts the housing market.
Rates have been rising since the start of this year, but today was a big one. The average rate on the 30-year fixed rose 9 basis points to 7.24%. Now, that is the highest rate since May of last year. And just in the past 6 weeks, we're up 66 basis points. And from the most recent low in September, rates are up well over a full percentage point. So, okay, here comes more math. If you are buying the median priced home, which is around $400,000 today, and you're putting 20% down on a 30-year fixed, your monthly payment, principal and interest, is now $239 more than it would have been just back in September.
Let's take a listen to Mike Simonson from Altos Research, who has his finger on the pulse of national home sales data.
New contracts for home purchases are coming in very low this month. We counted 10% fewer home sales for the week than the same week a year ago. 10% fewer. So the housing market is on hold until mortgage rates come down. When will that be? I have no idea. Buyer activity has been dropping for several weeks, and there are now fewer total homes in contract than a year ago. Both the weekly new contracts and all the homes in contract pending stage are below last year.
The data I have affirms exactly what he's showing. We're showing contract volume down 13% in Nashville. Now, I've been saying this for weeks now. I've been calling this. Of course, now the national headlines, and I said this 4 weeks ago, that you listen to this channel, you'll always know what's going on well before others report it. And we are we're lower than 2023. This is a very, very frozen housing market. And just to give you an idea of what is happening, let's read from Redfin. Pending home sales fell the most since 2022 in December as mortgage rates jumped. I want to show 2 key points that this Redfin report calls out. One is that home purchases fell through at the highest December rate on record. Monthly pending home sales that fell out of contract as a percentage of overall pending home sales. So we had 3 spikes here. And each one of those spikes coincided, obviously the COVID coincided with COVID, but these coincided with massive interest rate spikes. And here we are again, a huge chunk falling out of contract. That's a warning sign, something to keep an eye on. But here's the other one. Existing home sales rise the highest level in almost 2 years. Now, this is supposed to be a positive, but the problem with this is all from when mortgage rates were year over year negative. It is no longer the case. Mortgage rates aren't year-over-year negative. And you can see if you look year-over-year from a year ago, this is the change in 30-year fixed rate mortgage. You can see when we went negative, sales went positive. Now that we're going year-over-year positive, as it's higher than it was last year, we're going to have lower sales. And of course, here we are. We saw this pop up. And again, I said, it's going to be negative. It's going to be negative. It's going to be negative. Now people are saying, hey, it's negative. Watch this chart. It is the single most important chart. And it's comical because you do have all of these forecasters. Don't listen to anybody in real estate forecast interest rates. Don't listen to them. They'll all sound compelling and they have no clue. And Lance Lambert does a great job of calling this out. He says the 30-year fixed rate mortgage is at 704, exceeding all 17 end of 2025 mortgage rate forecasts tracked by Residential Club, Resi Club. And 2024 was the third year in a row where mortgage rates surpassed most forecasters' calls. Will 2025 be the fourth straight year? And you can look, here's all their calls. The highest was Redfin at 6.8%. The lowest, National Association of Realtors, shocker, 5.8%. The point is all these real estate people, they have no idea where mortgage rates are going. They have no idea. And look, I don't either. Nobody knows where mortgage rates are going. But what we do know is that the risk to the upside is so much higher than all of these people will tell you. Do not think you know where mortgage rates are going. Do not buy a house thinking you know where mortgage rates are going. You want a low mortgage rate? Assume a mortgage. Don't assume that you can get a lower rate later. You do not know. It's a very risky game, especially right now. And look, I spent 2018 to 2021 riding the mortgage rate wave down. I was refinancing my house every 6 months. I was playing all kinds of mortgage rate games, okay? Those days are over. It is not happening right now, and it's very risky. But I'm telling you that from someone who played the game. If you listen to Stanley Druckenmiller, he doesn't just talk about interest rates rising, but he talks about there's a case in which the Federal Reserve could cause a melt up in asset prices.
And who knows if the Fed stimulus into a melt up in asset prices with the kind of animal spirits I talked about give you upward inflation, which is not our forecast, but we're definitely open-minded to it, and we're not expecting lower inflation.
I've talked to multiple people, this is not just one, who have made a ton of money from Bitcoin and from some of the other cryptocurrencies, and they are wanting to buy a house. So don't think that these melt-ups don't impact the housing market. So be careful out there. Doesn't mean prices are going to go up. And with that, I hope you all have a great rest of the day. I look forward to seeing you on Saturday. Thanks a lot.